What's going on, everyone? We're going to go over the indices, we're going to go over the stock market, the crypto market, and the bond market in today's video. Let's get right into it. Okay, starting with the SPY. So clearly, the SPY, we've been monitoring this blue trend line, uptrend line. I haven't really been posting recently, but this trend line is still intact, and you can see that the SPY clearly failed to cross above it. All right. I'm going to wrap all of this up at once towards the end. Okay. But the immediate future, so the immediate future, the SPY essentially needs to hold 450.50. And then the next very important level of support on the SPY is going to be 447.11. Okay. Purely that for now. Okay. The NASDAQ, you can see that we're clearly still struggling to cross above this uptrend line that we've also been monitoring, right? Right here on the NASDAQ, right? And you can see that the NASDAQ is much closer to that uptrend line than the SPY is, right? And you also noticed that a few weeks ago, we were trading outside of the upper level of the B band, which is supposed to be a bearish signal. But because we are in an overall uptrend, right? Anytime we do fall outside of the upper level of the B band, I said that it looked a lot like April. And, when we were trading outside of the upper level of the B band right here. But then what ended up happening was we ended up going higher, regardless of being so overextended. Okay. We ended up going higher, holding on this high, and then falling. Okay. So we are in that holding on higher phase. So this can last maybe another week or two, maybe 3 weeks. And then I believe that we will go and retest, these lower levels here. Okay. And one other thing is that we were trading outside of the upper level of the B band, right? We've looked at what happens whenever we're trading outside of the lower level of the B bands, right? Because the market, and especially with the Bollinger Bands, the market acts like a rubber band. So if you notice that when there is a huge red day, the next day is usually a bounce back. Okay. So when the market sharply falls down, it sharply goes back up. But that is not the case when we are sharply to the upside. Do you understand? We don't sharply fall down. Especially, this is only applicable in an overall bullish market that we are in today. Okay. The opposite is true in a bull market. So for example, when we fall very, very heavily, we rebound very, very quickly. Okay. And you can see that through the NASDAQ. You can see that we're failing at this level of resistance. That's fine. Cool, right? That's just the line that we have to monitor essentially on the NASDAQ. The level of resistance for tomorrow for that level is going to be 383.31. Okay. Now, going back to that point, the IWM sharply fell, right? It ended up going outside of the lower level of the B band, and it went exactly to the 212 to the 213 area that I said that I would be buying in much heavier. And I alerted that I was buying 225 September 9th calls or September 3rd, September 10th calls, right? And this ended up working. We were in the money. We were up over 400, 500%, depending on when you wanted to sell it, right? Anyway, the IWM, you can see that it failed at an uptrend. Okay, so it was trading above its uptrend, whereas the SPY and the NASDAQ were not trading above the uptrend, right? So now today, the IWM finally crossed down below that uptrend level, and it fell below a very important level of resistance, which is 228.08. So now the next level of support for the IWM is back down to this 224.11 level. And yeah, essentially that's really it. We need to see now if the IWM can create somewhat of a bull flag, if it can consolidate a bit along either 224, or if it can fall a bit and then create some sort of a support around 222, essentially. So that is what seems to be the case for the overall indices market, right? But sometimes looking at the stock market itself is not enough, okay? Which is why it's very important to also look at the 30-year yield, the 10-year yield, and the dollar, okay? So let's go ahead and let's talk about what's going on in the bond world and the dollar world, all right? Number one, the 30-year yield, which is what we're watching right now, heavily affects the NASDAQ, okay? So when the 30-year yield and the dollar go up, that means that the NASDAQ will go up. So all throughout here, when you can see that the 30-year yield was going on higher, 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 the NASDAQ was doing very, very well, okay? And usually, so one other thing that I want to really, really stress here is this little time frame right here, okay? So which is August 11th to August 23rd, okay? You can see that the 30-year yield held intact, okay? So what this means is that investors, banks and hedge funds, etc., they believe that the longer term outlook of the NASDAQ was going to be bullish, right? Right here, from the middle of August to the end of August, right? So now if we go back to that same time frame for the NASDAQ stock itself, you'd be able to see that the NASDAQ was actually falling, and it fell very, very sharply, okay? Sorry, got a phone call. Anyway, so you can see that the NASDAQ was falling, right? During this time, it sharply fell, right? But then also during this time, the 30-year yield still remained intact, and it was trading above its uptrend level, all right? So what did that signal? It signaled that regardless of what the hell the NASDAQ was doing, or falling, etc., blah, 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 whatever it was doing, right? The overall outlook meant that the overall outlook and the strength in the 30-year yield meant that investors and banks and hedge funds were not worried about what was going on in the NASDAQ, okay? That was purely just a opportunity to take profits. That's all it was. Because as soon as we became very overextended to the downside, this was bought up and new all-time highs were made because they saw the strength in the 30-year yield overall, okay? So that's why it's very important to watch what's going on in the 30-year yield in unison with the stock market, okay? So specifically right now, the 30-year yield is getting pretty overextended to the downside, okay? This is not a bullish move. So now, really, if the 30-year yield now begins to fall below 161.04, essentially this trend line here, right? This level here, 161.04. If it starts breaking down below that, that is when I think the NASDAQ is really going to start showing, you know, potentially start rolling over just a little bit, because this is not a very bullish setup. This isn't very good, but you know, we have to see how we respond at 161.04, and then, you know, we can end up falling below 160 on the 30-year yield. So we need to see now if, you know, the 30-year yield does still have that very strong correlation to the NASDAQ, okay? So when the 30-year yield and the dollar do well, the NASDAQ does well. When the 10-year yield and the dollar do well, the IWM does well, okay? And the 10-year yield has been doing pretty phenomenally for the past like 2 months, which is why the IWM was the biggest leader essentially from the NASDAQ and the SPY as well, okay? So now we need to see if the 30-year yield continues to fall. And yeah, so now let's go ahead and check out the dollar. So the dollar, it's bouncing off the lows. It was very overextended to the downside. It fell outside of the Bollinger Bands, right? Found support, and we're now bouncing. So essentially, we need to see how the other two bonds are doing. If the 30-year yield does well alongside this dollar, that means that the NASDAQ will do well. But if the 10-year yield is doing well alongside the dollar, that means that the IWM will do well. Okay, so let's just continue monitoring what's going on. But it's very important what's happening with the 30-year yield. This is a huge warning signal potentially for the entire market, essentially. Okay, so just keep that in mind. And Bitcoin, of course, today was a huge dip, and it fell like pretty severely today. It was at the upper level of the B band, trading outside of the upper level, and then it fell sharply all the way outside of the lower level. So these were very beautiful opportunities to buy the dips on Bitcoin and Ethereum and the rest of the crypto market in general. You can see that these Fibonacci levels that we've drawn out here, especially this 38.2% Fib level here, it bounced exactly off of that level. Yeah, so now it's just, I mean, look, longer term, Bitcoin and all of these other cryptos, in my opinion, the entire space is going to be very, very good. So if you have any sort of money laying around, this isn't financial advice, but I would, this is what I tell my friends. I tell them to just blindly put in some sort of money every week, regardless. You don't need to trade, but crypto is definitely something in the long term. In the next 5 or 6 years, you'll definitely see a much, much better return, longer term holding than you would in the stock market, and especially if you just held the money in your bank. But again, I'm not your financial advisor, and this is not financial advice. Anyway, Bitcoin, essentially needs to hold above this 45,600 level. But, this is just a lot of volatility. The main level of support is going to be this trend line right here, this very dark green trend line. And again, when we look at it in the log chart, this dark green trend line breaking was the signal to the downside capitulation for Bitcoin when it fell from 40,000 all the way down to 30,000 in a day. So that is that trend line on a log chart. So when I take it off of a log chart, you can see that the support level is very, very close to where this is that same trend line. And you can see that it's very close. So essentially, the next key level of support is going to be this trend line here. That essentially, when we broke out of back in July, it signaled that we were going to continue going on higher. So now today, it went and retested that level. So if we weren't looking at anything today, this is what we're looking at, and you would see, okay, look, we crossed above this trend line, great. We came back, retested that trend line, great. And now, whoa, new all-time highs, broke 50,000, broke 52,000, and boom, all in one day, it fell almost touching this trend line. So now, yeah, this is essentially going to be this level of support. So essentially 42,000, 43,000 are going to be the levels of support for Bitcoin. Ethereum, another huge fall in Ethereum, very clearly. Essentially 3,000 needs to hold on Ethereum. If 3,000 doesn't hold, then 2,700 needs to hold. But in general, I mean, look, these are all long-term, great dip buying opportunities. If you believe that Bitcoin is going to go to 100,000, if you believe that Ethereum is going to go to 10,000, these smaller things like this, I mean, look, like, imagine even putting like $100, $200 a week into, crypto in general, right? If you're putting $50 into Bitcoin, $50 into Ethereum, 5 years, that $100 a week is going to be at least probably like total. It'll probably be at least 3x, 2 or 3x total, right? So that's just passive money that you weren't doing anything with. So yeah, I mean, hey, not your financial advisor. This isn't financial advice. I hope you guys enjoyed the video. Please let me know if you guys want me to do technical analysis on anything for tomorrow's video. And yeah, aside from that, I will see you guys tomorrow. Have an amazing day. Thank you.